today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 26, NASDAQ up 154, S&P's up 14, gold contract down $19.80, $18.56 an ounce. You got silver up 38 cents, $24.07 an ounce. Light sweet crude up $1.11, $42.46 a barrel. Notes and bonds. You get the 10-year up one tick, 137.15. The 30 up 6 at 170.06. And King Dollar's up 411.93, 160. King Dollar's going to try to make that swing high again, which has failed 3 separate times since August 2nd. You get the euro at 117. The yen is at 105.5, and the British pound is at 132 to 1 U.S. dollar. Tom O'Brien, what's going on?
Boy, quite a market, man. We got a little bit of a reversal going on today, right? We got the Russell negative, the Dow just slipped negative, Boeing actually negative 0.5%. You got the S&P's up 15 points right now, and tech stocks up in a big way, man.
Yeah, you got to love it. And then that S&P, someone has it in for the S&P, folks. Okay, we went down 15 points.
It was quick, man.
And just a couple trades. So we'll see how that shakes out the rest of the day. Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, you want to understand the option market, option strategies, futures, outstanding show. Kevin and his team, they set up trades every trading day. If you haven't test driven yet, the Thinkorswim platform, so easy to do. Outstanding platform. We use it every day. You're on the website, hit the banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Happy Veterans Day, guys. And
yes.
A little muted trade in the bonds today, a little muted trade in stocks really overall. I mean, Tommy put it right. I mean, futures kind of peaked out really before the open even today. They were off their highs. We were talking about that with Oliver Rennick this morning. So, you know, this is a day where originally the NASDAQ kind of jumped back to its leadership. And it historically, in the last 9 months or so, the NASDAQ has, when they've talked about rotations, they haven't lasted very long. And the NASDAQ jumps back to the leadership. Well, it did this morning. We'll see if that holds throughout the day, though, guys.
You know, it's so cool. And, folks, this show that Kevin and Alex Coffey do is just outstanding. And I heard you guys, he was coming back yesterday saying, hey, you know, every time that we go through this, all of a sudden the NASDAQ peeks its head up again, right?
Right.
That was pretty cool, man, because it's so it's amazing, actually, man. Do you know what I mean? Because the NASDAQ, no doubt, folks, the NASDAQ has brought us up, and this is for years. Every time you think the NASDAQ's dead and tech is dead, it's like, guess what, man? All of a sudden you wake up in the morning and the NASDAQ is on the run again, man. I don't know if they eat Wheaties for 2 or 3 days, man, and then just decide that, okay, I'm taking off again, man. But pretty wild. There's no doubt.
I mean, all you got to do, and you can do this on the Thinkorswim platform, is look at what makes up the NASDAQ.
Yes. And
you realize why it does what it does on certain days, right? When the bond moves big, you know, the NASDAQ can move without the bond market because there's really no financial sector in the NASDAQ where it is in the other three. So it's much more like tomorrow. We're going to get CPI data out tomorrow. That'll probably move the bond market more than likely, as I think CPI for inflation and looking at the bonds is probably the number 2 data point of the month other than non-farm payrolls. So that might move the bond market, but that won't affect the NASDAQ really because there's no real financial exposure in that in the NASDAQ. So, you know, it's interesting, that's for sure. And this move in the 10-year yield has been pretty spectacular and pretty fast. And this may not be the move. The move from 0.7, 0.6 to 0.95 may not get everyone's attention. But the next one, if we move from 0.95 to maybe 1.2, that'll get everyone's attention, Tom.
Yeah, no, I can see that. And particularly, we have been so attuned that lower for longer. There's no doubt when you look back on just markets in general, folks, okay, when you start relaxing, that, like I'd say, relaxing lower for longer, then guess what? You can't relax, folks, if you're in the marketplace. You can relax, but you can relax basically after you get your trades closed.
Yeah, in my, 30-plus years, 34 years now of trading, I realized that the big red flag for me, if I'm ever comfortable, that's about as big of a red flag as you could possibly have.
I know.
My internal red flag. Because the minute I'm comfortable, you can bet something big is going to change and make me uncomfortable. And that's just the profession that we've chosen, Tom.
I know. And that is so cool what you're saying, because it's so true, man. If I fire my first trade off in the morning, and most of the time it's like 7 o'clock or something, right? And I'm not thinking, this or that or this, I'm in trouble, man. I mean, we both know the difference. It's like, oh no, hold it. Is it, it's not mechanical, folks, okay? The bottom line is you got to brainwash yourself and know that, okay, where can I lose, not where can I win? So it's a trip, man. There's no doubt.
I'll tell you a great old trading story. I was standing next to a young man who was working for me, and he was about to have a bad day in one of these stocks. And I looked at him and I said, now calm down. I go, can you feel that churning feeling in your stomach? And he said, yeah. I go, get used to that.
Yeah.
Because that usually is, that's going to be with you for most of your career, unfortunately.
Well, the way I figured, it keeps you younger, too. That's the real bottom line, It just does. I think, Got
to stay sharp, that's for sure.
It keeps your blood flowing. It keeps you focused on current events and things that are happening. It focuses you to study and read and make sure you understand what these moves mean. Like, Tommy, you were mentioning Boeing was down 0.5% today because they talk about the EU may fine them. Well, that's a great trading story, and that may soften up Boeing for a little while, but Boeing is now back up on the day, and that's a trading opportunity. Right?
Amazing.
Because no one's going to care about a fine from the EU. The number one thing people care about is a return to flying and an overall, people buying the 737 MAX. That's what everyone's focusing on with Boeing. But you're right. That headline comes, Boeing trades softer in the morning. Guess what? That's a trading opportunity right there.
Yeah, and I mean, Boeing, the way Boeing's set up, man, that move, 2 days ago, was like Boeing can hit this 234, and right now you're at 189. So the bottom line.
Notice you look at the news wires on Boeing today. A bunch of people starting to creep up their target in Boeing. So if this market recovers, everyone's going to need new planes. And the Boeing 737 MAX, no matter what you think about it, it'll be the most scrutinized, most inspected, safest plane ever to go up when it's all said and done.
Yeah, no doubt. Listen, folks, 45 minutes from now, outstanding show. Kevin, you have a great day, a safe day. We look forward to the show.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 25. Nasdaq's up 164. S&Ps are up 14. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 31, Nasdaq's up 171, S&Ps are up 14. And, if we go over, this, there's been a lot of action in China last night, that's for sure. What you also had, folks, in Hong Kong, the bottom line is that any type of democracy, even in quotes, that they may have had, it's over. It's over lock, stock, and barrel. Simultaneously, it looks like they're going to basically get some new clamps on high tech. I mean, that's how this thing is shaking out.
It sure is, man. Baba, though, you can't keep down a stock when they do $50+ billion in one day because it's actually up almost 2% on the day, man.
Those numbers were amazing, man.
And let's go over them real quick because I mentioned them, but 56.3 billion US dollars. That's 372 billion won, and they claim it as in the first 30 minutes after November 11th. But they added a shopping window earlier this month, so you were able to load those orders probably for a period of weeks. They were talking about. Still, you're talking about $56 billion of orders that they got ready. They did 38 billion last year, and I bet as they were processing all those orders they had, how about just the computing power? 583,000 orders in 1 second, not 1 minute. Everyone used to talk about what they did in a minute, right? Amazon or something. How about a second? 583,000 orders. So, and you can see the news on, now this is getting back to the article even, because they talk about, but they're overshadowed, regulators seeking to curtail the growing influence of Alibaba, other Chinese shares, regulations governing the increasingly dominant internet companies, new antitrust Beijing, when they release new antitrust regulations, man, that's not like Speaker Pelosi or President Trump. That's basically an indication of what's coming down the line.
Yeah, that's all they have to do is say it and it's done. Yeah, different ballgame.
Seriously.
Yeah, no doubt. Let's go take a look at some of the higher volume equities. We'll see if we get any volume out here today, folks. So you get Apple is the mover. There's only, you get Apple, Google, Amazon. They all up inside the NDX 100. We'll see whether they can hold. Apple is up $1.98 right now. American's down 19 cents. American's a dog. I heard you talking about it on your program, Tom.
Yeah, did you see that?
And also, so look at this chart. You can see it in the chart, too. It's really intriguing that, so I forget what happened going back on June 4th. June 4th and 5th, American went from 11.44 all the way up to 22. Now, all the equities did this. No, all the airline equities did it, right? But guess what? Now watch this. UAL, I believe United actually went up and tested some of these areas. Some of them, yeah, see, United didn't get to the high of that, but that was $48, and United went to 44. You can see it's quite clear. Whatever is going on in American is a monster problem. I mean, American got up to, 14, and that high there was 22. So...
And what's crazy? I literally just Googled like American Airlines June 4th, and it looks like that's the day that they started talking about bringing back some legs that had been shut down. So that was kind of the peak period of hope, and you see it trail off, right? In the period of from June 8th to, it didn't take long, July 8th, you basically give it all back. And that was a period they added like 130 nonstop flights back that they had pulled pretty quickly, I guess.
Okay.
And so that was, it was just basically added on nothing, as in, there was no reason to, there was some hope, but nothing material. They added flights. All they probably did was add themselves some costs.
And can you imagine that you go up market cap that dramatically and then give it up in spades?
Yeah. And the move in American, man, the pop we got on the vaccine news, it gives it all back almost. We're talking about from 11.50, we're up 60 cents from where you were trading to the close of Friday versus the other equities like Delta. That's up, $5 from $31. United Airlines, same deal, right? Yeah. Up for $5. So yeah.
And then we had Lyft. Lyft come out with numbers, right? This is. You go back 2 weeks ago. Lyft was at 21 with 38, folks. Okay.
That's like incredible,
isn't it?
It is. All of these, risk reward wise here. Going into now this Lyft a lot more dangerous than Uber because of the presence Uber has in food delivery. Lyft saying that they're going to try and get into some of that. We'll see if they have any success.
Really? Okay.
Yeah. They had talked about part of that. I don't know if that's really factored in. That's, in my opinion, it's a little far-fetched with the lead those companies already have, right? But they're looking at maybe even a different business model of trying to work with companies directly, I think. Because the fees are so high, saying that restaurants basically are paying a percentage, which we all know it's like what 20-30%.
Yeah, my understanding is 30% for most restaurants, right?
So I think we'll have to go over it because I'm pretty sure that they talked about they're going to try and eat into that in a different manner.
And if you talk to Uber drivers, folks, okay, they have been busy beyond belief. We get Uber Eats a lot, and I've been taking Uber again. And I've asked them, now this is only I'm talking about in St. Pete, okay? But the bottom line is that every Uber driver that I actually asked, they said they've been busy beyond belief because they have the food too. That's the kicker. I don't know whether they separate it or some people just do food. But the people that do both, they're busy, man. That's the bottom line.
I'm not certain. I think you have the ability pretty simply as a driver to do one or the other once you're in the system.
Okay. Pretty wild.
Yeah.
877-927-6648. You can see, let's go to the S&P for a second, because what you want to keep your eye on here, folks, is that when I mentioned when we were first coming on, someone hit this S&P, and they hit it 15 points in about a heartbeat. And that's a heads up, because what happens is that that was at 950. We went from 35.66 to 35.51. You don't go down, folks, 15 points. Well, you can see it's 47,000 contracts.
Yeah.
Most times when you see something like that, just if we saw that on the way up, you're gonna that fund of the bank is coming back in. You see it on the way down, guess what? You better hold on for the ride here, because most times you don't see that just once in a day,
I even put it on a minute chart just to see the real movement, and it was fast and furious over a period of 5 minutes. Basically, you were down there, and 1 minute in particular, man, and those volumes, you were doing 8,000 contracts. You did almost 9,400 contracts at 956 right down there at the low. So
man, that's amazing. When you start doing the numbers on this, folks, it's like crazy. Because you got to remember something. Every contract in the E-minis. Now, this is E-minis. This is not, it's $177,000.
Man.
You know, so you're talking about some real juice. You know what I saw?
You just got to add.
Yeah.
You just got to add 3 zeros basically as you approach 10,000. No, 4 zeros as you approach 10,000, right? Yeah, 4 zeros. Yeah.
Crazy, man.
Yeah.
No doubt.
Yeah, in a minute.
Yeah, in a minute. You got to love it. And you know what I saw yesterday? So check this out. This is kind of interesting. That someone, now you never know how this really shakes out, but someone closed, you know, they're basically saying SoftBank is still in the option market in a big way, right?
Okay.
And they actually when they come out with their numbers, those numbers were in there, and the analysts were trying to figure out, well, they didn't make any money here. And yesterday, someone closed a monster trade at a monster loss.
We'll pull it up after. I saw it at the top. If you go back one screen,
okay, cool.
Yeah, it was there. You had clicked on it. I saw
good.
the whales in Microsoft and the options. Perfect.
And it looked like a monster loss. Dow down 56, Nasdaq up 164, S&P's up 15. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is down 10. Nasdaq is up 185. S&Ps are up 21. And we were just talking we're talking about Microsoft. We're talking about this trade that closed yesterday. And what's intriguing, as we're talking here, is that Microsoft's up 550.
They should have held off. I know. So if you can leave your screen up, right? I
Yes.
have a chart of Microsoft up, which is great. So we'll be able to look at exactly where. So they bought this on August 5th,
Yeah.
right? So what it looks like they did is they had a call spread, right? They had bought a 220 call, and they sold a 240 call. Okay, and
Yes.
Microsoft was trading on August 5th at 213.
Okay.
So they bought, basically, they're the ones that paid the premium to be able to own Microsoft between 220 and 240. Okay, and it looks like they had to buy the 220 calls for 1340. They capped their profit at 240 by getting a credit back of 665. Let's just call it around $7, right, that they
Yes.
were paying. So they paid $7, and they had action between 220 and 240. Their break even becomes 227. What I wanted to highlight is they had a nice trade going at the high here, man, at 232, right?
Yeah.
And you accelerated at 210 yesterday, and it looks like they got back about $1.30 in value. Probably saying, hey, I'm going to get something. They probably didn't expect now that Microsoft will get back above 220 by the when that expires, but man, that's quite a loss when you're talking about 75,000 of them.
Exactly.
Yeah.
It's amazing, actually. And
they had such a winner in there. Listen, that's a lesson, folks. Look at that winner. That was big money with 75,000. It made it into quite a value range, and within 2 days, it went from 232 down to below 210. And then you made it back to almost 230,
right.
And then it was to 210. My goodness.
And what does happen, this is inside the volatility, when they're closing these out, that throws volatility in the equity also. So, I mean, if we really...
Yeah.
So it's pretty amazing. And then you see the pop, okay, because that trade got cleaned out. That's what we're looking at here. Which is, wow, man. Pretty wild. So
75,000 calls, that would be 7.5 million shares, right? Because 75,000, you got to multiply 100, so it's 7.5 million shares they had, and they lost from about $7 to $1.40. They lost like $5 maybe. So it's $36 million loss, maybe somewhere in that area, right?
Yep, and they put up, what did it say? Well, it didn't say how much. Well, we could have calculated, but it's a monster, man. And
they lost most of it because they put up almost $7
right.
and they got back $1.40.
Right. And if you go to
or $1.30.
If we went to SoftBank, folks, SoftBank came out with their numbers 2 days ago, and Sun was just basically saying that, hey, listen, when you look at how big SoftBank is, this is only 1% of our capital and all that. Well, the analyst was saying, hey, man, it's not 1% of your capital. You leverage this to 3% of your capital. And what are you doing trading stocks because you didn't even make any money? Yeah, I mean, so.
Can't make money if you never sell, man.
Yeah.
They got into that trade on August 5th. By September 3rd, it was at 232 from 213, man. September 2nd, so.
Yeah.
Maybe he doesn't know how to close out his profits. He seems like a man that likes to let it ride.
There's no doubt. There's no doubt
right?
and what does happen, folks, is that inside the option market, you see, because of the leverage that you have, that's why you're using options. The bottom line is that when it goes into a profit like that, man, I'm telling you, man, take it, man, because you're talking about very small numbers when you're leveraging out here, basically 90 to 1. I mean, that's how most of those options are shaking out.
And even today, I bet the move it's getting. I'll take a look at it maybe at the break, but I was going to see so it's the November monthlies probably.
I'd say that, yeah.
Yeah, and they had
because the
220 to 2. Yeah, I'll pull it up at the break. It's too quick.
They had the 220 calls was sold and the 240s were bought. Well, no, just the opposite. The 220s were bought. That's right. At the beginning of the trade, they had to close them, so they basically, they sold them the two.
Sure.
So when the trade that they initially put on is that they bought the 220 calls November, they sold the 240s, and then as they closed them out yesterday, it was just the opposite, of course, but. Yeah. So.
Yes, right. And then today they could have sold it for $2.10 on the 220 and buy back the 240 for 10 cents. They would have got back $2 they would have got back almost 50% more money.
Oh my God.
Today alone.
That's sick.
Than they got back yesterday. But you got a 2.6% pop, and they were probably saying, you got 9 days they had left, and they probably looked at it and said, I'll take $1.40 because Microsoft needs to get to $221.40 basically for them to break even on just taking that money off the table at least.
Yeah, and what you had, it's all the tech stocks were getting smoked, so I could see them on the other side saying, hey, this is very unusual, which it was. That's the bottom line,
Because they had 7.5 million shares of action, basically, with 75,000 options. So if you get $1 back, you're talking $7.5 million. They got $1.40, $1.30 back.
Yeah.
So you're talking about almost $10 million by taking that off the table. And still, Microsoft is $3.50, almost $4 away from where they need to be to have some value. Just kind of cool to see that trade and how big it is.
Isn't it? No doubt. Let's go inside the Dow Industrials and take a look at the strength versus the weakness out here. Now, the Dow is all by itself, folks, the last couple days, meaning going so tremendously higher. So it would make sense that the Dow could take a little break here. This is pretty wild. That the Salesforce is the equity that's putting the points into the Dow, plus 49. That was getting smoked. Microsoft, plus 33. Big Mac, plus 23. Man, Big Mac is turning into a powerhouse, man. This is, they always have been, but I can tell you, between burgers and then, if we fast forward 10 years from now, man, Big Mac, very well could be what is it called, plant-based food? It's not even plant-based food, really, folks. That plant-based food is really not good for you. Well, plant-based food would be good for you, but the junk that they put in those burgers and the rest of that stuff, when they make the aspect of those things, you look at some of that stuff and it's weird. But the bottom line is that McDonald's is probably going to be the king of it.
McDonald's is a well-run company, man. They got a brand like none other, and they're super innovative. That's why they're still. You think about the transformation they made, man. They were a very old company, as in all of their stores were getting dilapidated, man.
Yeah.
But they rejuvenated everything, and they'll be in good position when things come back, as in opening up a lot of their restaurants, which aren't even open in a lot of areas, let alone everybody getting used to just driving through.
And they get the best French fries in the world. There's no doubt.
Yeah, listen, Big Mac, there's only going to be one Big Mac, man. There's only going to be one McDonald's French fry.
No doubt.
One Happy Meal, right? Seriously, man.
Yeah.
Those are the things that, if you want to be a long-term investor, you buy companies that have products that nobody else can replace. There you go.
Dow's flat. NASDAQ is up 167. You got the S&Ps up 19. Gold's making a little comeback. We're down $13 right now, so we got under the lows. And we're looking for a rejection of lower price out here. Silver's down 23 cents. King Dollar's up 400 ticks, 93.150. Stay right there, folks. Tommy and I come right back. Oh, and by the way, folks, we have oil tomorrow. We would have done the oil. Veterans Day. Happy Veterans Day to everyone out there. Making a great one.
That's right.
We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials up 4, Nasdaq's up 154, S&P's up 18. Let's get over to our man, Mr. Teddy Kakestat at forex-trading-unlock.com. Teddy's website, folks, is forex-trading-unlock.com. Teddy Kakestat, what's going on?
Good morning, guys. What an interesting way the markets have moved since last week when we talked after the election, huh? Right back when we started, basically.
It doesn't matter what currency you want to look at, man. We're up, down, and all over the place, right?
Major volatility in the currencies. Now, the kind of funny thing is, like, the yen, which I know is one of your favorite currencies, that buy signal that was triggered 2 days ago on Monday, the dollar index had a short-term buy signal. You had the euro US dollar that are now a little short-term bearish, US dollar Swiss, which is bullish, and then the US dollar yen. Now, you know how I always, reinforce the fact that when most currencies are trending one way against the dollar, the yen is usually the opposite.
Yes.
But US dollar strength, I think, in the short run. Now, we had the election, volatility of last week. And remember I mentioned remember when we talked last week, how the 30-year Treasury bond had over a $5 basis point move,
right,
between the election and Wednesday when we spoke last week. The 30 years back now on those lows, okay? Now, this is a big deal because the yield curve spread now is so stretched between the short terms and the 30-year. I mean, the market is commanding higher rates no matter what right now.
Yes.
And that's really evident with what happened, because last week was the spike of the news and the election, but now things have calmed down, and now that market has come all the way back. So meaning bond prices are going down, interest rates are going up. This is a big strength for the U.S. dollar in the short run because you need flight to quality somewhere. So if the Swiss is falling apart and the yen is falling apart and the 30-year is falling apart, where do you go?
Right.
You can only go to the dollar, So I'm not bullish the dollar overall, but it's really hard when you have the 30-year and the 10-year futures bashing new lows and extremely while the short-term curve is locked at its high. And I think that you're really going to start to see this stretching, because remember how we were talking about how we started to have divergence in the currencies at the end of the summer?
Yes.
Now we have where, there's always this attack on the dollar right now, especially because it's an election year. But the markets are so stressed now, not stretched, but stressed, that you need to have balancing. So you can't just constantly be battering the dollar when all these other markets are falling apart with indecision. And I think that, you had this big rally that happened with the stock market because of Pfizer and whatever. the interrelationship of equities, debt. I mean, look at what happened with gold too, with that sell-off.
Oh, that yen controls gold, man. I mean, if anything, you could see what happened. I mean,
right.
It's just
that's why I started with the yen, and I think that what happened 2 days ago with that yen move and with the gold move, that's not just profit taking. That's an actual line in the sand for the short run, saying with all this volatility and the stretching of the divergence between these markets, those are solid. They planted their little spot for a short-term low or a short-term high.
Okay.
Now, you know what I'm saying? So I think that, before we were talking about how the certain markets made higher move highs and higher move lows simultaneously in a short time.
Yeah.
So that puts us in a very neutral bias, and we have that because we don't have a decision on the election. We know that, with the coronavirus thing, I mean, one day they have a cure, one day they don't have a cure. I mean, like, this indecision, the market likes it for volatility, but there's no direction, and I think that until we have a solid, confirmation of who's the next president of the United States. I mean, remember, this is deja vu. This happened in 2020. Everything that's happened in the past week, Al Gore went through that same motion, so, and I think that you're really seeing that, like, the banks, they're really looking at this, you know what I mean? And you're just not going to get a big move. You're not going to get a lot of strength in the dollar, but it's going to be really hard to crush it, and look at what the lockdowns, like with the UK. The pound is going to have a really tough time at maintaining these highs that it's been trying to stress. Like, I see it getting back down to $1.30. I see the euro getting back down to about $1.16.5, $1.16. You know what I mean? Now, this is not a big move, but it's most likely going to start to hammer support and grind there.
Can we go back to the yen for a second? I really want to understand this yen. So, when you say that, I mean, this yen, folks, I've seen this before, and what it does, if the yen goes weak and goes weak big, goes to the moon, it goes the other side. So when you say the line in the sand, now, is that, do you speculate, was that the government of Japan, was that just buyers that were coming in at that 103 flat out and just drove it? Because
I think so.
Yeah.
I
okay.
do.
Cool.
That's
really
yeah. Do.
Right.
I don't see it as a volatility spike or short covering or anything like that.
No, I'm with you. They just said I want to park my bread here. Right. Yeah. Right. It was
right. I think that's where they're saying, like, they don't want to see it get lower than that. I mean, remember, while the currencies have been volatile this year and basically trending only since March, the U.S. dollar yen has been in the bear market now for a very long time. So I mean, I'm not calling for a bottom, but definitely for the short run, I think that there's a line in the sand that's been drawn.
Sure, no, I can see that. And what Teddy's saying, folks, what happens is that when that yen gets too strong, the Nikkei gets destroyed. So it'd be like our market's getting destroyed. And, so they're stepping in saying, hey, that's it, man, I'm done. Okay, cool.
It's counterintuitive for their own national sovereignty
big time.
Their finances.
Yeah,
absolutely.
Big time. Interesting.
Exactly.
And then, of course, then you're going to have to really get us educated on these bond moves, too, because you can see that there's no doubt that bond move just smoked the technology stocks, man. Right. I mean, that was, you talk about divergence. If people weren't in the market for a while, man, how the heck is the Dow up 1,800 points and the NASDAQ 100 is down, right?
Correct. Yeah. Absolutely. So, and I think that's what we're seeing, like, we have 2020 obviously is a crazy year for everything. Predicting markets is tough, but I don't think you're going to see any major trending going on for the next couple of months. I think we're establishing a wide range trade. Yeah. And remember the euro US dollar, that was in a $4 range for over basically a year. Until 2020. And look at the action that it's had in 2020. It's moved around more in 2020 than it has in multiple years, So, and I think that we're coming to this, I mean, we're going to know who's president by January, no matter what, So, and then we have Brexit that's still going on in the middle of lockdowns, So, and these things they're not off the table, but they're not really moving forward well, and that just leaves too much indecision. So I think range traders are going to have a really fun time over the next month and a half. Swing traders, I think you're going to have to be very careful about thinking that trends are going to evolve. I don't think trends are going to happen. Unless we see the interest rates really fall out of bed. I mean, could you imagine if the 30-year bond goes from 170 down to 150 while the euros are locked at their ceiling?
I listen, man, I think the next move in that 30 years, 167. I mean, it kind of broke everything. But, 167 is where we broke out of in February, I think, right? I mean, that's where, we went topside. So it's like, okay, right. Man. And what's so weird, of course, is that we're all used to lower for longer. And guess what? The market said you can be used to whatever you want, but guess what? No.
And you know what's going to start hitting the financial stocks too, like the banks and the exchange stocks. I mean, think about this. The CME, the Eurodollar product, not the currency, but the Eurodollar is one of their biggest volume contracts.
Yes.
It's not doing any business anymore. What's that going to do to their profits?
Oof.
You know, and the banks, that's going to affect the banks to trade the interest rates too.
Oh, I like it. Teddy.
We'll talk about that later.
You're awesome, man. Appreciate the education. You have a great week, safe week. We look forward to speaking to next Wednesday.
Great, guys.
Thanks,
Take care, be safe.
Thanks, Teddy.
Stay right there, folks. Tommy and I come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrial's down 18. NASDAQ is up 147. You get the S&P's up 16.5. And, folks, if you think the market has some volatility, well, guess what? Go on the NOAA map for hurricanes because I've never seen a storm like this in a long period of time. It just took a right and is going to come slamming right into my windows outside of my office. And this is like sick. I mean, it's like, you got to be kidding me, man.
It is quite the storm, man. Ada.
It's like
Ada, right?
sick. If folks,
and, this is a great...
Yeah, go ahead.
Great segue, I was going to say, because I brought it up this morning. That site that you mentioned, firststreet.org, right, for flood waters. Because, man, I'm getting flood insurance next year. If we get storms that are ripping into Florida in the middle of November, imagine just being on the wrong end of some luck, as in the right storm, the right place, in the warmest of waters in late August, early September, and we'd be in big trouble, man. It's the middle of November, and we got hurricanes hitting our coast.
It looks
check it out, folks.
It looks like we may be in the wrong place right now. This is the first. This is what I just got an emergency deal. Okay, anyway, it looks like it's freaking coming right at us, man.
Well, be careful, man, and get out of there and get safe. And you probably
I gotta go put more lines on the boat. I got a million lines on the boat right now, but I'm gonna go put more as soon as I get off the air here, man. This is sick.
Yeah,
unreal. I can't believe it, man. It's November 11th, right? Yeah,
that's right. That's I say it seriously. FirstStreet.org. You're the one that brought it up to me. You can pull up properties. They show you your accumulation. Man, when you look at some of these odds, right? Yeah, you can dodge 1 year, but you're going to be in your property 20 or 30 years. They really do a great job of showing you how those odds stack up and the high likelihood. Man, this is crazy. But stay safe, everyone out there.
Ride 'em, cowboy.
That's
Here
right.
we go. Stay right there, folks. Think of Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
And I'll have my foul weather gear on, folks.
Oh, boy. Get it.